Mr. Caxton Masudi, welcome on set.
Thank you.
COVID-19 has created an environment where, of course, many Kenyans have lost their jobs and many companies have closed down. And, of course, we do appreciate payee and corporate tax are key revenue drivers for you. How does the year ahead look like from a revenue generation optic?
This is definitely a difficult year for the Kenya Revenue Authority, given the effect of the COVID-19 on income of Kenyans. And you know, this is where our taxes are based. So what we are projecting this year is to raise up to 1.7 trillion from various taxes. But I think what Kenyans need to know is that following the introduction of relief by the president to relieve Kenyans on the effects of COVID, the effect of this has been a reduced forecast on the revenue performance. So, but it's our expectation that the authority will recover some of this from the new initiatives that we are undertaking.
I want to get to the issue of the Finance Act of 2020. One of the key amendments that I was reading around there is this issue of the claims on input tax. And I think now the burden has been transferred largely to the business person in terms of input-output matching. Don't you think that this is an extremely high demand of the verification process for the businesses, as opposed to KRA using its own internal mechanisms to try and ensure that this matter is streamlined?
I want you to appreciate that when you submit a VAT return, you normally indicate two things. One is your sales and the amount of tax that is computed from those sales. Then the second part is your purchases and the amount of taxes that has been paid on the purchases, which is now becomes what we call the input. The difference between the two is what you pay to the tax authority. Now, for you to deduct input tax, you are actually expressing to the commissioner that that amount has been paid, because you are saying, I ought to have paid you so much, but because I have already paid so much, then you want credit for that amount. Now, that becomes technically a refund. Now, if it becomes a refund, refunds can only be granted for taxes that have been collected. You cannot grant a refund for taxes not collected. So the credit then needs to refer to an amount that has been submitted to the commissioner. If that amount has not been submitted, then the commissioner is not aware that that input is valid. So the validity then is on the basis that it has been submitted.
So we came from a cycle which was very intense. We came from the tax laws amendment coming into the Finance Act, I should say. And there, of course, were items which were considered in the Tax Laws Amendment Act that were discarded, then they came in the Finance Act and they were approved. And many of us out here are asking, is there a challenge, because the standing orders require that it should take about 6 months before this is reconsidered? Does it bother you perhaps that someone could legally challenge this in court in terms of some of these provisions?
I think what the government did was to introduce law, and they do it in compliance with the standing orders. But I wouldn't want to dwell so much on parliamentary processes, because those are internal parliamentary processes. But if you notice is that the Tax Laws Amendments Act introduced many different things that were not in the finance bill. So what we are talking about here is like and like. You know, what I think those standing orders are trying to introduce is that when you pass a new law now, you at least take 6 months to amend it. But remember that the Finance Acts and the Tax Laws Amendments Act were amending specific provisions of the law. So that's why I'm saying that what was introduced by the Finance Act is different from what was introduced in the Tax Laws Amendments Act.
When you talk about tax-based expansion, and of course previously we've engaged KRA, we had an attempt at presumptive tax, which to the best of our knowledge didn't fare so well. Of course, then we reintroduced turnover tax. Now the two are running side by side. What is this about widening the tax base that seems to be a challenge in this country?
I think the biggest challenge that we have in this country relating to tax-based expansion is the issue of cash economy. You know, when transactions are made on cash basis, usually there isn't so much reference records to determine the correct taxes. So there are quite a number of people who trade in the economy without, you know, going through legitimate channels. For example, there are people who are in business and they do not go for licensing at the county governments. They don't come to register for taxes. However, we think that we have enough footprint of the transactions in this country to bring in additional persons. So, for example, there are people who are in county records, not in the KRA records. So these are some of the people we are bringing on board. We have people who have registered with professional bodies and have not registered with the tax authority. So we are bringing that on board also. We have people who are undertaking transactions even beyond the country. I mean, across our borders, purchasing goods, buying services. And these are some of the information that we use to identify active persons in the economy that needs to be brought to tax. So we use intelligence and data mining to identify persons who transact within this economy and have not come forth to pay their taxes.
When you talk about the digital services tax and really just to try and understand how this works, say I purchase a book on an online platform, and many Kenyans out here would be keen to understand, so do you tax the transaction cost? Do you tax the value of the book? How exactly does this work?
Digital service tax is a tax on the service provided by marketplace owners. So what happens is that if you consume a service from that marketplace, digital marketplace, then what you pay as tax, or what is charged as tax, is charged on the whole of that service. But where goods are traded on a digital marketplace, it is the fee charged by the marketplace owner, the digital marketplace owner, that is subject to tax. It is not the goods. So it depends on what kind of services you are enjoying or what kind of transaction that it is. So if it is a purchase of goods, it is the fee charged by the marketplace owner that is subject to digital service tax. If it is a whole service that you are consuming, then it is that whole amount that is charged by the digital marketplace.
Okay. Just rolling back to something we were discussing earlier, why is it that the presumptive tax, for example, didn't fare as well as the authority had expected?
I think the issue is that most of the persons that had been targeted by the presumptive tax were largely people who are trading without records. And most of them also were trading without being registered by any institutions of government. So this is probably one of the reasons why it had a low takeoff. Number two is that the range also of the persons that were being targeted was much smaller. It was up to 5 million. And you know that most of the transactions for people who have turnover of 5 million and below is mainly cash basis. But this year we have decided to use this to simplify the tax accounting for persons who earn up to 50 million Kenya shillings in a year. So basically, this could have been some of the reasons why there was a small uptick.
I see. And when you look at the environment, of course, we have seen in the recent past, KRA has now taken up revenue collection on behalf of the Nairobi County government. I think there's also an arrangement with Mombasa. How do you feel this is unfolding in terms of the adequacy of the counties to mobilize on-source revenue?
The counties have been struggling to mobilize revenue in their jurisdictions. But it is also largely because they haven't had a very long history and experience in revenue mobilization. But so many of them have actually requested the authority to assist them in to help them in revenue mobilization. Like you may have heard, the Nairobi County government was the very first one to appoint KRA to collect revenue on their behalf. And we now have about 3 other requests for immediate engagement, and we are engaging them so that we can help them collect revenue. The experience, for example, from Nairobi County Revenue is that despite the COVID situation, depressed business activity that is in the country currently, we are actually performing much better than what they were doing in the same time last year when there was no COVID. So our performance then really, because of the experiences we have in revenue mobilization, we have done much better. But we think we still have even higher opportunities in raising additional revenue for county governments, because we are now improving the business systems that is used to collect county revenue. And when we are fully rolled out, we expect to collect much more than what we are collecting today.
All right. And that point by Mr. Masudi takes us to a short break. We'll be right back with a lot more on this discussion on the tax environment in Kenya. Welcome back to Business Redefined. Tonight we are speaking to KRA on matters the tax environment in this country, especially in light of the present environment of COVID-19. And we are joined on set by Mr. Caxton Masudi, the Deputy Commissioner, Policy and Tax Advisory at KRA. Welcome back on set.
Thank you.
There is the view out here that perhaps KRA is too abrasive when it's going to for a number of entities or businesses which are reported to have been evading tax, and that perhaps we should be looking at the alternative measures of resolving this matter. What's your view on this?
KRA actually collects 95% of its revenue from voluntary compliance. It is people who do their own assessments, they post the figures in the system and pay the taxes. It is a very small percentage of our taxpayers that have challenges paying their taxes. The law has to enable any law enforcing institution the powers to take action against those that do not want to comply, even when facilitated. You know, so when you see KRA going outside there to take action against people through investigation and enforcement, we're dealing with hardcore taxpayers that have been given information about what they ought to pay, when to pay, and how to pay, and yet they are not willing to pay.
Deputy Commissioner, we are aware, of course, of the tax amnesty program, and we have seen reports that the authorities are unable to trace. Granted, we appreciate that when one is repatriating this income, it is not necessarily coming in for tax purposes, it's coming in as their own assets. But just speak to this issue. How was the whole amnesty program, and would you like to set the record straight as far as that is concerned?
I think there are 2 things. The amnesty granted was granted to persons who repatriated funds to their country. Now, second part of that amnesty allowed people to make declarations of the amounts to be repatriated, but only certification that and relief would be granted to the amounts that have actually been repatriated because they were given 5 years within which to bring back the money. So no money it's not that we are not able to trace, because every amount that has been declared as repatriated is declared to a specific bank account. So the authority has the mechanism to verify with the banks if the money was actually repatriated. And that process is ongoing for those who have repatriated the funds and those who intend to repatriate. So we have records of both those who made declarations to repatriate and those that have actually repatriated the funds.
Getting to the subject of the minimum tax, which is something which has elicited a lot of feedback from the public. I know that the setting of the policy sits with another institution, which is the National Treasury, but just keen to know, what are your thoughts around minimum tax, the implementation? What sort of targets perhaps would you be looking at from this particular pool?
We have noted that there are companies or institutions that have been making perpetual losses, but they have enough funds to sustain their operations. So what the government decided to do is to ask for some kind of token from these individuals to support development of the country. So the expectations from this is initially is about 1 billion shillings. So, but we expect this to go up over a period of 1.5 years or so as the economy expands. Yes. But also, I think it's also good to appreciate that when the minimum tax is payable only if the amount of installment tax is lower than that the amount computed from minimum tax. So when the economy again improves, we expect more people to make better returns from their businesses, and probably will render much of the minimum tax redundant. Because if you are paying more than the minimum tax, then you don't have to, it doesn't have to be effective on your turnover.
Shouldn't this have been staggered in the sense that if you've been making losses for a given duration, then you are subject to this? Because assuming I am just starting a business venture, and we all understand how starting a business can be, it takes a bit of a while. Don't you think it will be unfair to such nascent businesses compared to those which have been making losses perhaps for a very long time? All are being netted into this.
I think what government did was to create some level of consistency. Because remember that any person who earns less than 50 million or up to 50 million Kenya shillings is required to pay turnover tax. And they pay turnover tax on the turnover, not on the profit. And therefore, it was also important that anybody who earns more than 50 million still makes a contribution, just like the people who have turnover of less than 50 million. So it was a way of creating some kind of consistency. We don't want to only burden people who earn up to 50 million Kenya shillings, but also those who earn over 50 million. They should make a contribution as well.
Mr. Masudi, how do we sit with the VAT refunds discussion? Because, of course, this has also been leveled as one of the stimulus measures taken in light of the COVID-19 pandemic. But just from the KRA standpoint, of course, we understand there was a backlog. How are we looking at as far as this is concerned?
We have made a lot of improvements, enhancements to our service delivery in relation to refunds. We have committed to reduce the processing time to below 90 days from the time of application. Number two, the government has also committed additional funds to paying refunds. Remember that immediately when the president announced relief, on top of the amounts that we have been paying on monthly basis, another 10 billion shillings was actually committed, and that money has been paid. In terms of improving the process, we have provided a risk-based approach to processing of refunds. And companies that have very good standing in tax payments, which we now classify as low risk, are processed through green channels, which means that their refunds can be paid without audit. We only subject it to standard verification, which is based on on-desk audit, and the refunds are paid.
So in terms of the quantum, how are the numbers looking like?
I think this year alone we've paid out, no, last financial year, we paid out about 25 billion shillings, okay, in excess of 25 billion.
We're in an economy which on average grows by about 5%, yet the tax revenue targets keep on being revised upwards by double digits. Don't you fear there's a limit to which your administrative adjustments can be reached, and there at that point then KRA will be a bit overstretched as far as mobilizing this revenue is concerned?
What has happened year in, year out is that a lot of the taxes have been brought in through revenue enhancement initiatives. And a lot has to do with how the revenue is collected, so improvement of systems, how we engage our taxpayers, so taxpayer education, taxpayer facilitation, because like I said in the very beginning, 95% of our taxpayers pay their taxes voluntarily. The government has also invested a lot in simplification of tax payment processes. For example, the introduction of TOT does not require you to keep extensive records, because all that you need is how much you have sold in a particular day. So this is some of the initiatives that have been put in place to ensure that we bring in more taxes, much more than what would be expected from the growth of the economy.
Thank you so much for your time, Mr. Caxton Masudi. And that takes us to the end of our conversation tonight, where we've been focusing on the tax environment, covering a raft of issues, whether it's minimum tax, presumptive tax, how the mobilization of revenue is happening with some of the counties which are now using KRA. Up next is the Markets Report.